Support and resistance are two foundational concepts in technical analysis. Understanding what these terms mean and their practical application is essential to correctly reading price charts. Support and resistance can also be interchanged with supply and demand. Welcome to Take It Easy Trading, your channel to get stock market updates, trading levels for popular ETFs, stocks and Bitcoin. You will also find tutorials on how to trade, develop your own trading strategies and learn continuously. Please like, share, comment, and if you find value in my videos, please subscribe to get notified of new content. The basics of support and resistance levels or supply and demand. Prices move because of supply and demand. When demand is greater than supply, prices rise. When supply is greater than demand, prices fall. Sometimes, prices will move sideways as both supply and demand are in equilibrium. Like many concepts in technical analysis, the explanation and rationale behind technical concepts are relatively easy, but mastery in their application often takes years of practice. What is support or demand? In a downtrend, prices fall because there is an excess of supply over demand. The lower prices go, the more attractive prices become to those waiting on the sidelines to buy the shares. At some level, demand that would have been slowly increasing will rise to the level where it matches supply. At this point, prices will stop falling. This is support. Support can be a price level on the chart or a price zone. In any event, support is an area on a price chart that shows buyers' willingness to buy. It is at this level that demand will usually overwhelm supply, causing the price decline to halt and reverse. What is resistance or supply? Resistance is the opposite of support. Prices move up because there is more demand than supply. As prices move higher, there will come a point when selling will overwhelm the desire to buy. This happens for a variety of reasons. It could be that traders have determined that prices are too high or have met their target. It could be the reluctance of buyers to initiate new positions at such rich valuations. It could be for any other number of reasons. But a technician will clearly see on a price chart a level at which supply begins to overwhelm demand. This is resistance. The resistance can be a level or a zone. Basics of support and resistance. Support and resistance can be found in all charting time periods, daily, weekly, monthly. Traders also find support and resistance in smaller time frames like 1-minute and 5-minute charts. But the longer the time period, the more significant the support or resistance. To identify support or resistance, you have to look back at the chart to find a significant pause in a price decline or rise. Then look forward to see whether a price halts and/or reverses as it approaches that level. Many experienced traders will pay attention to past support or resistance levels and place traders in anticipation of a future similar reaction at these levels. Technical analysis is not an exact science, and sometimes price will dip below support levels or reverse before it gets to the prior support level. The same is true for resistance. Price may reverse before it gets to the prior resistance level or break above it. In each case, flexibility is required in interpreting these chart patterns. This is why support and resistance levels are sometimes referred to as zones. There is nothing magical about these price levels. It is simply that many market participants are acting off the same information and placing trades at similar levels. Trading with support and resistance. Once an area or zone of support or resistance has been identified, those price levels can serve as potential entry or exit points because, as price reaches a point of previous support or resistance, it will do one of two things: bounce back away from the support or resistance level, or violate the price level and continue in its prior direction, until it hits the next support or resistance level. The timing of some trades is based on the belief that support and resistance zones will not be broken. Whether the price is halted by or breaks through the support or resistance level, traders can bet on the direction of price and can quickly determine if they are correct. If the price moves in the wrong direction, breaks through prior support or resistance levels, the position can be closed at a small loss. If the price moves in the right direction, respects prior support or resistance levels, however, the move may be substantial. Role reversal between support and resistance. Many traders who use technical analysis hear phrases that suggest a broken support level will become a future area of resistance or that a previous level of resistance will become a support. For beginner traders, phrases like this sound like they're spoken in another language, and even many experienced traders never fully understand or appreciate this intriguing role reversal. One of the most interesting phenomena regarding support and resistance occurs when the price of the underlying asset is finally able to break out and go beyond an identified support or resistance level. When this happens, it is not uncommon to see a previous level of support change its role and become a new area of short-term resistance. As you can see from the chart below, the dotted line represents the price that was able to prop up the price movement at points 1 and 2, but this support turns into resistance once the price falls below it, as illustrated by points 3 and 4. The opposite of this process occurs when the price breaks above resistance. As you can see in the figure below, points 1 and 2 begin as price barriers, but once the bulls are able to push the price above the dotted line, it becomes an area of support, illustrated by points 3 and 4. Summary. Technical analysts use support and resistance levels to identify price points on a chart where the probabilities favor a pause or reversal of a prevailing trend. Support occurs where a downtrend is expected to pause due to a concentration of demand. Resistance occurs where an uptrend is expected to pause temporarily, due to a concentration of supply. Market psychology plays a major role as traders and investors remember the past and react to changing conditions to anticipate future market movement. Support and resistance areas can also be identified on charts using trend lines and moving averages. That's all in this video. I hope you enjoyed watching this video, and if you want me to make more such videos, please drop a like or share. And subscribe to my channel to get notified of new videos. See you in the next video.